Everybody, uneducated economist here. So we discussed negative interest rate a lot on this channel and how people are going to react when it comes to their bank accounts, their deposits facing a negative interest rate. Back in February of 2019, the IMF had on the IMF blog had this to say. This is their proposal. It says, the proposal is for central banks to divide the monetary base into two separate local currencies, cash and electronic money, e-money. E-money would be issued only electronically and would pay the policy rate of interest, and cash would have an exchange rate, the conversion rate, against e-money. This conversion rate is key to the proposal. When setting a negative interest rate on e-money, the central bank would let the conversion rate of cash in terms of e-money depreciate at the same rate as the negative interest rate on e-money. The value of the cash would thereby fall in the terms of e-money. Okay, so what they're saying is that central banks create a cryptocurrency and then start attaching a negative interest rate to depositors on this e-currency. So if you put your paycheck into the bank account, it'll sit there in e-currency and start losing to a negative interest rate. Anybody who is savvy and say, well, I'm pulling my money out in cash before all this happens, and they're going to have cash sitting in, under the bed. The exchange rate of your cash to the e-currency will face the same negative interest rate as the deposits on the e-currency. So when you go to cash take your cash in, it will have devalued to the e-currency. And this is what the IMF has proposed to the central banks and to the banking system in general to deal with the cash hoarders out there. Now get this. This came out from the IMF, not the IMF, but the BIS, the Bureau of International Settlements. This came out just a couple of days ago. I believe October 8th is the date on this one. It says, the Swiss Centra will initially conduct research on two projects. The first of these will examine the integration of digital central bank money into a distributed ledger technology infrastructure. This new form of digital central bank money would be aimed at facilitating the settlement of tokenized assets between financial institutions. Tokens are the digital assets that can be transferred from one party to another. So if you're not quite familiar on how tokenized assets work, let me try and explain it like this. If you can imagine the dollar being the cryptocurrency and a US bond being the asset, the tokenized asset that's attached to the US dollar. So the US dollar has been converted into an e-currency, and part of this e-currency is a token. It's tokenized. It's representation of the bond that is redeemable in the e-currency. And these tokenized assets can represent stocks, they can represent bonds, they can represent a physical item, but you do have to trust a third party for it. So like they could say, hey, I got this piece of silver sitting on a shelf. It's tokenized, it's on a digital wallet, it's redeemable, but it sits in this vault. So that's like a tokenized asset. And this is what the Bank of International, or the Bureau of International Settlements, is now created in Singapore, Hong Kong, and Switzerland. Are these hubs that are now dealing with these digital currencies using tokenized assets and facilitating the trade between them all. This is the beginning of a digital-based currency. Once these technologies become refined and become, well, pretty much obsolete everything else out there, they will encroach themselves around the world until everything has become a tokenized assets based on a digital ledger system. Okay, I'll leave links down in the description for you guys. Uneducated Economist, you guys let me know.